Hi everybody, it's Christian from Serene Education with the 4 major zones update for the 23rd of January 2014. Okay, 4 majors this morning, starting with the euro against US dollar on the daily. Let's have a look and see what has been happening. You can quite clearly see now hard right edge, euro pulling back against the US dollar, and it's primarily because we have a lot of news out today, guys, for euro this morning. A ton of news. We've started off with the French flash manufacturing PMI results, which came out really positive. So well, not really positive, but positive. So above expected, or above the forecasted data, which is good. Spanish unemployment rate has just come out, and that is, or came out as expected, at 26.0%. Next up, we're going to have the German flash manufacturing PMI result, which is quite a strong one, quite a really important one, and they're expecting a 0.4% expansion there on that figure, and the same for the flash service PMI result. So, and then we have the current account, and then flash manufacturing PMI for the whole of the eurozone, followed by some news later on. We also have the WEF annual meetings part 2 today, so all the financial ministers, etc., will be having they're attending this meeting in Davos. It's attended by all the central banks, prime ministers, financial ministers, trade ministers, business leaders. Over 90 countries get together and have a huge cocktail party on our expense. Okay, so euro, what are we seeing now? We've seen in the past 4 days, we've seen consolidation after a clear pullback on euro against US dollar, and the intermediate trend you can quite clearly see is one of negativity. The long-term trend is very much up, as you can quite clearly see here. Swing highs bar this fake out. We are seeing the price above the institution moving average on our daily, which is also a sign of positiveness. However, near term, we have, and I have mentioned this, we have seen the candlesticks going red recently. So we had a red arrow, price actually fell to break above the 61.8 monthly fib recently, and subsequently that's forced price lower. And recently we have seen swing lows, which is why we have an intermediate trend low. However, if you look at the indicator box, there's a lot more positiveness on here than negativity. So when we have this pullback, and it's continued to pull back quite sharply over the almost a full month now, going into a full month, you'll notice we have a red arrow and the candlesticks have gone red. But all these candlesticks just recently, over the past 4 days, in fact, have been all indecisive. Yeah, very small trading ranges, a lot of indecision in those trading ranges, a lot of splitting tops, in fact. And all this coming under the prior support and resistance level here. So the movement you're seeing now intraday is primarily as the data, the euro data, comes out, especially now that we had some really good, well, the first part of the data coming out, and that's for the French manufacturing side, and that's been positive. We've seen this knee-jerk reaction, so price rallying higher, and you can see the last 4 hours actually closing low. So we have a genuine consolidative range here at this very level. So if I drop down to the 4-hour time frame, you will notice that price has been consolidative over that period for a full week, in fact, and that's a clear resistance level, and hence the reason why I've plotted that support and resistance level. You can see the last 4-hour candle closing higher, and the candlestick that's in play now is moving higher. But you'll notice that the candlesticks have not changed color. We do have a blue arrow, which is important. Okay, the indicator box is telling me I should be looking for buying opportunities, but we're clearly in a downtrend, and for this to be really positive, ideally we want to be trading out of this consolidative range. We have seen a lot of consolidation since the earlier parts of January of this year. So this is only going to start looking really healthy for a genuine move higher once we get above the out of this consolidated range and above that institution moving average on our 4-hour time frame, and then we could start to look to really take some nice profit, and there's less hindrance. You can see over here a lot of speculation, here a lot cleaner. The air's a lot cleaner up here above the 40,000 feet mark, and jet streams, and that's what we want to do. We want to get into that jet stream, and then we can tackle that clean movement towards a 61.8 monthly fib level above price. We have the monthly fib level below, and that's pretty much stopping price from falling any lower. You can see a lot of consolidation, and the OSMO indicator has really started to show one or two things. This is either going to be a building process, because the OSMO is above already, or clearly showing consolidation. So here what we would like to see is obviously a positive day today for Eurozone, which would go a long way. This afternoon we have the unemployment claims figures for the US market, and they're expecting more people to be claiming unemployment, which is not a great sign. So the previous figure was 326,000. They're expecting 331,000 people to be claiming for unemployment. So there a noticeable increase of 5,000. So if that does come out higher than the forecast, then we could expect further movement for Euro strength this afternoon. If it comes out lower and the US unemployment claims are not as strong as they anticipated, then we could see consolidation, and that consolidation could be price trading back within the consolidated range here on Euro. So the importance is we do need to see price trading above this level here. Ideally, let's just go for a nice clean one right around the 13.69 and 60 change. So if you want to put in a trigger alert to see price closing above that, if we do, then we're going to see a nice bull candle day, which is going to cancel out all this consolidation we've seen over the past month or so, and that's going to tell us we should be looking high again, because now on our daily we're seeing Euro coming out of that consolidated range and then trying to reattempt the highs it's just come from. Remember, the long-term sentiment over here is very much long. Okay, the institution moving average is still below price on our daily, so therefore we should be always looking for long-term sentiment to be up. Okay, I hope that makes sense. Sterling, fantastic. Yesterday we had some really positive figures for sterling in terms of the unemployment figure dropping towards 7.1. Carney has mentioned that they'd only start to even contemplate looking at interest rates once price had actually closed, or the unemployment figure had closed lower than 7%. And yesterday it came out at a healthy 7.1%. So there's a lot of jobs, clear jobs being made out there, and people are genuinely finding work, which is a good sign for the UK market. And you can quite clearly see here on the indicator box straight away, you're seeing a lot of blue. Yes, there's one or two areas where the R squared, which is important, is not matching that sentiment, but overall the sentiment is up. So therefore I know very clearly I should be looking at nothing more than buying opportunities. However, as I mentioned yesterday on my analysis, I'm well aware that price has been consolidated around the monthly fib level here at 38.2, but this yellow line above me is my monthly institutional moving average high, and also that major resistance level high that we've seen over the past 4 years, guys. It's a strong resistance level. Price has failed over the last 4 years to get above this area. So 1660, 166 change is a vital resistance, support and resistance level. Okay, so we're seeing a lot of growth on sterling, which is fantastic. However, it comes to nothing if price cannot close above it, because over the last 4 years, in fact, price has rallied into this area very aggressively, but has failed to gain the overall long-term sentiment it required to break it, and therefore we saw a lot of pullbacks and a lot of strong negative pullbacks once we hit into that area. And if I can just take you to that particular time frame, you can quite clearly see it there. Let me just move this out the way. You can see through 2009 resistance, institution moving average, reattempts of end of 2010, start of 2011, institution moving average in the way of a positive month resistance, and vice versa since then. So here we're back here again. We are showing a lot of sentiment higher. We got to see this month punching through. If we don't see January making a stance and breaking through this long-term support and resistance level on our monthly, then there's likely to be consolidation, and that will then inform us that we could see February, March, potentially March, being more consolidative for sterling against US dollar. So in terms of long-term setups and potential trades, we have to be well aware of that. Okay, so this is the importance of looking at the long-term stuff. So building, fantastic. Ideally, if you are trading this, trade aggressively into this major support and resistance level and take all your profit away, because the overall sentiment out there for the traders, they will be well aware of that. They'll be well aware that each time prices rallied into this area, there's been a very sharp change in market sentiment from one of very positive to one of negativity. So the overall psychology here is we have to see sterling getting above it. If we don't see sterling closing higher this month, then there's more likely to be consolidation with an outcome to be bearish. US dollar Swiss franc. Here again, recently we have seen the US dollar finding a bit of ground against the Swiss franc and moving higher. In fact, finding a bit of support on our monthly fib level, which has been great, and price has moved higher. And we went through a period where, even though we've had the bounce, we have seen the candlesticks, or the candlesticks remained negative. And you can see here on the daily, the institution moving average still remains above price, which is also a negative sign. Notice the indicator box. There's more negativity shown on this particular chart than there is positiveness. Okay, so we have to be well aware that we should be looking for selling opportunities. Okay, the only time this becomes more of a positive outcome is when we see price physically closing higher than the institution, which is so important, and we start seeing that shown on the graph. So if we look at the daily here, for example, we have a blue arrow, which is great, blue candles, which are also great, RMO is above, which is great, and the OSMO is also above the zero line. So the 4 parts of this template are telling us we should be looking for buys. However, you'll notice we've had a lot of indecision recently. So the candlesticks are telling me there's a lot of indecisiveness out there, and that indecision is coming at a price support and resistance level high. This is a last week high. So if she's not making new highs, then she's likely to make new lows. Okay, and if we're not seeing new highs, then there's consolidation or indecisiveness out there. And you can see the institution moving average is still above price. So you can see I've drawn a horizontal line above this area, and that is where I put my trigger alert for a close higher. If I get a close higher than that, then what I'm seeing is price making a genuine stance for further positiveness or US positive or bullishness against the Swiss franc, and then I could start to look towards capping towards my monthly fib level, which is the 50% fib level above, which is a healthy 218 pips away. But I'm not going to be looking for that buying sentiment until she closes above that level. Okay, ideally on a weekly, because my overall stance is I'm still looking for negativity, because the indicator box is telling me that there's still a lot of negativity on this particular chart. Okay, so very important. Using the mechanical approach in this, guys, is so important. US dollar Japanese yen. Here again, also a lot of positive sentiment for the US dollar against the yen. We were trading in a very tight wedge formation for a long period of 2013, in fact, and subsequently what happened was, going into the latter part of this year, last year, in fact, apologies, we had a nice breakout, but I was not interested in trading this until we actually saw price getting well above the 50% fib retracement level, because by then she'll be tackling the price swing low, which was so important, because swing lows dictates negativity and swing highs dictates upside. So very important. We started seeing positiveness on this particular pair as we were still in a consolidative range, and then we had the breakout, but that comes to nothing if we don't break above the monthly fib, and we did see that breakout pullback, and that's where we really made our money. The bounce, the breakout, pullback, bounce, and then the continuation. And the continuation was likely to head towards the next target, which happened to be our monthly fib target, 61.8, excuse me. And that's where we are right now. We've seen a lot of consolidation. Price has failed to break above that level. We have seen a lot of consolidation, as I mentioned, and we started seeing intermediate swing lows. Okay, the candlesticks are still telling me I should be looking buying, but we're seeing consolidation. So intermediate swing lows as prices pulled back aggressively. However, we saw a tweeze at bottom here, and then a reattempt, and then we went into this consolidative range. So swing low, swing low, swing low, breach. You see yesterday's candle, the daily, trading into the prior swing low, okay, but failing to close higher than that. It's very important. As I mentioned to you, you're only going to start seeing genuine sentiment moving either way as long as you're breaking the prior resistance level high, or you're breaking the prior support level low for continuations. Here it's not exactly the same. Drop down to our 4-hour time frame. You can see price has been very consolidative. Most importantly, the institution's below price, which is great. It's still hanging on to the upside, but we want price to close higher than the prior resistance or swing area, because if it fails to do that, and you can quite clearly see price rallied into last week's highs but failed to close above it. The last 4 hours, or the last 8 hours, in fact, has been bearish for this particular pair, and it's come at a price of one resistance level high. So here, if I'm looking for more buying opportunities, which is what the chart is telling me to do long term, then I do need to see a new high being created, ideally a 4-hour high. So here, trigger alerts above 104.68 on the 4-hour time frame to start with. Get a trigger alert close. Ideally, a daily would go a lot further in this case, because we are trading at resistance level highs. If we do get that close, then I know that I can start targeting that target which happens to be our price support and resistance level high, which is a healthy 81 pips away, which happens to be the monthly fib level 61.8. If we fail to see price making new highs, guys, then we're likely to see price being squeezed now, with a very, very likely outcome being that price is going to drop lower, break lower, and then we could see price heading towards our monthly fib low, which is the 50% fib retracement below. And that, guys, is a healthy, you're looking at about 400 pips or so to the downside. So there's more than enough in the tank to see a valid return on time invested on this particular pair, if we do indeed see negativity, which is showing out coming through in the intraday, pushing price lower. Okay, so ideally here, another daily candle close, ideally above these current highs, would go a long way to say we should be looking for further upside. If we don't see that, then we see price being pushed low again. Got to see price getting below the institutional 4 to really confirm that the sentiment is starting to really move or dictate further consolidation, and then we could look at our charts to get a better indication of how far she's likely to pull back. Okay, guys, that's it on the 4 majors. Gone into a lot of detail, but I think it's important for you guys to see that how I go about doing my analysis on the pairs, and this goes for any pair that I look at. This is the same methodology that I've applied in any of my charts, and it's the same methodology you should be applying on your charts, and then just backing it up with some money management. Very, very, very important. Okay, so a lot of data today for euro against US dollar, or eurozone, as I clearly mentioned. We have German flash manufacturing results still to come. We have the current account for eurozone, which is very, very important. Then this afternoon we have the unemployment claims and the existing home sales figures. Our number of the US data results you should be looking for this afternoon. Okay, so have a fantastic trading day today, and I will catch you guys first thing tomorrow morning. Until then, you guys trade serenely.